Isn't that fascinating? Very few people had Humanity Protocol on their radar, yet the price is rallying massively. Who's buying here? Who's selling here? Let's have a look at the on-chain data, the data most people are not considering, to try to figure out how much longer this rally might last. So here's the return this week. We more than 3x'd. This month, we more than 5x'd. The chart pretty much looks like a hockey stick. And we are still below 1 billion of market cap. We are only at 740 million. The token is at market rank 82, so it already entered the top 100 largest cryptocurrency. Now the narrative of Humanity is to provide a protocol that serves as an identification for the user. So in a way, the project tries to identify deepfakes, tries to prove that something is genuine. But in the end, all that matters is the adoption of the platform. How much does Humanity get used? There are official numbers on the website. Close to 9 million total users, a bit less than 500,000 verified users. The data implies constant growth with thousands of transactions every day. 128,000 transactions in the last 24 hours. Now, I'm always interested in whether or not the data makes sense, or is there potentially something that doesn't add up. Over here, we've got the number of new active accounts per day. And there was 58 at its peak on the 31st of October and is now at around 30 or 20 accounts per day. Now, this tells a very different story. If there's so few new accounts that get added to the network every day, how can there be so many transactions? Are those accounts, those verifications that we've seen a moment ago, are they legitimate? Have a look at the number of daily transactions. Again, there's more than 100,000 per day now. It shot up out of nowhere from pretty much nothing to suddenly close to 200,000 in July, and since then has stabilized at the current level. Now, when we look at X, it seems like this is legitimate, as in there's more than 200,000 followers here. But the problem again is that many of those followers might be bots as well. Let's have a look at the on-chain data. There are two versions of the token, one on Ethereum and one on the Binance Smart Chain. On Ethereum, we've got only 5,652 holders. This does not align with all the following on Twitter. What about the Binance Smart Chain? That's over here, 2,110 holders. So really, on chain, there are very few long-term investors into Humanity. The token is currently roughly at $0.33. So what we see here on the left, that's the number of wallets that have at least 3,000 Humanity tokens. So it's roughly $1,000 worth of the token. That's on the Ethereum chain. In the middle, we go a 10x from that. So that's now 30,000 tokens, or $10,000 worth of the token. On the right, we have the whales with 300,000 Humanity tokens, or $100,000 worth of the token. We don't really see any natural development here, as in the number of holders is spiking up and crashing again and spiking up again. So the numbers are low, but even those low numbers seem to be quite manipulated. Let's have a look at the Binance Smart Chain. Here we might see some accumulation by the small retail investor, but again, the numbers definitely do not justify a crypto project being in the top 100. And it also doesn't justify the price appreciation, right? When the price is going up that much, why don't we see the number of holders on chain going up as well? We rather see the opposite, how the number of holders is going down. Here is the H token, or the Humanity token, relative to the overall altcoin market. So we are dividing H by the others market cap. The token initially dumped. It underperformed the rest of the market by 80%. But then, since the end of August of this year, things have turned around very quickly, and we've seen almost 1,500% in gains. Now, price is a function of demand and supply. Are maybe the tokenomics of the project that great that it might warrant an increasing price? Is maybe the supply getting burned that quickly? The answer is, I do not think so. This is the number of circulating H tokens over time. We started out with 2 billion, and in less than 4 years, this supply will more than 5x. I've got the impression that insiders are currently manipulating the price. Maybe it's market makers that create volatility to create attention to then dump the token. Maybe there are over-the-counter deals where a third party got the token at a discount but also had to buy up the token in the meantime. There are all kinds of possible scenarios, but none of them point towards organic growth. All of them point towards this potentially turning around. We have seen a similar game being played with the Mantra DAO token, right? Ohm, where Ohm got bought through over-the-counter deals and then Once the unlocks expired, the token was dumped very quickly by more than 90%. I'm not saying that the exact same thing will happen for humanity tomorrow, but the price appreciation does look quite fishy, especially given the tokenomics. Short term, all the price discovery does not happen on the spot market, it actually happens on the perpetual futures market. So on the levered bets on the price. In the last 24 hours, we only saw 58 million worth of trading volume on the spot market. Compare this with the perp volume. Here we had more than 1 billion, so 20 times the trading volume. So really it's the bets on the price that move the H token. Just have a look at the massively positive funding rate. So many people are currently betting on further rising prices. The open interest is at all-time highs. It's at 250 million. And there is correlation between the price and open interest. When open interest comes down, the price will come down with it. Trading volume is also comparatively elevated. And of course, some shorts got wrecked in the process. We have seen a similar short squeeze in the past. Now there's a very interesting misconception with altcoins. Have a look at this chart here. This shows total 3 ES divided by Bitcoin. Now what does this mean? Total 3 is the market cap of all cryptocurrencies that are not Bitcoin and Ethereum. ES means that we also exclude stablecoins. So this is all of the volatile altcoins that are not Bitcoin and Ethereum. And we look at that market cap relative to Bitcoin's market cap. So how are the volatile altcoins doing relative to Bitcoin? And it seems like this is trading in a range in the last 8 years. If we just look at the prior year, we also seem to just performed in the same way as Bitcoin. But clearly that is not true. Have a look at the performance of these smaller altcoins in the last year. Pretty much everything is red while Bitcoin went up. The key to the puzzle is to understand the difference between market cap and price. This here is an example of WorldCoin. WorldCoin over the years saw an increasing market cap. It went from a peak of 1.5 billion to 2.5 to more than 3 billion. So WorldCoin tended to grow in market cap. But have a look at the long-term price chart. It looks very different. WorldCoin's price peaked at close to $10 and is now below $1. There can be a massive disconnect. In this chart here, it just looks at the altcoin market cap relative to the Bitcoin market cap. And this is true for many altcoin related metrics. It's true for the others market cap. It's true for the others dominance. It's true for dominance charts in general. When we look at the Bitcoin dominance or the Ethereum dominance, we are just comparing market caps. We are not comparing prices. Even when the Bitcoin dominance stays stable, Bitcoin very likely has outperformed most altcoins because altcoins might have been stable in market cap, but they might have gone down in price. This effect that we see for WorldCoin is very typical for altcoins. Now here's the circulating supply of WorldCoin. Again, just an example of what's going on with the market. We had 500 million WorldCoin at launch, and that more than 8x'd over the span of 2 years. When we look at the entire altcoin market, at least the tokens that are tracked by Tokenomics.ai, we've got weekly unlocks of roughly $1 billion. So if the demand for the altcoin market is below $1 billion, if the altcoin market doesn't grow that much every single week, then the price goes down. Because all of those unlocks, they are tokens that get allocated to the early investors of the altcoin projects. They get allocated towards the founders. They get allocated towards the insiders. So they are cashing out at a rate of 1 billion per week. And if the retail investor doesn't buy at the same rate, then price goes down. So here is an example. This is WorldCoin in US dollars. Here is WorldCoin relative to Bitcoin. So a much more consistent underperformance. Now there are two potential takeaways from this. The first one would be to just completely stay away from altcoins altogether. Altcoins are rigged, altcoins are through dump on retail investors. But the second potential takeaway is to maybe flip this thing around. So we are betting on falling prices of WorldCoin, while at the same time betting on rising prices of Bitcoin. So when we flip this chart, we get this here. This looks quite interesting, doesn't it? Since launch, Bitcoin outperformed WorldCoin by 836%. So that's the kind of performance we are looking for. The problem, of course, is volatility, especially here at the end. So WorldCoin occasionally does have positive news. It still has development. It's still an active project. And so a strategy like this can still lead to temporary drops of 55%. Despite the long-term outperformance. So the idea to bet on token inflation structurally is a good one. The idea to bet on falling prices when things look like this is a good idea. But risk management is crucial, and we have to look at assets that don't have that much more active development, where we don't see any positive news around the project anymore. Here's an example I like to give regularly on this channel. This is Bitcoin relative to Balancer. Balancer also has a high token inflation, and yes, there can be some drawdowns along the way as well, but they're not 50%, they're only 30%. And on a logarithmic chart, this looks much more manageable. And so this strategy doesn't just work in theory, it actually does work in practice. Let me show you how. When we look at this relative valuation chart of Bitcoin to Balancer, and we compare this to just buying and holding Bitcoin, so that's now the line in orange, we can clearly see how betting on the differential, so betting on falling Balancer prices by betting on rising Bitcoin prices, has a way better long-term risk-adjusted return. And so I followed this strategy for the last 4 years. This is a monthly chart. Had I just dollar cost averaged into Bitcoin, I would have gotten the performance here in light gray. But because I also bet on falling altcoin prices at the same time, I got the performance here in black. Now the problem is, just because I make profit with that strategy doesn't necessarily mean that you have to make profit with that strategy. But I do believe in the strategy that anybody can mirror similar performance. What we've got over here is a copy trading vault. So the premium members of this channel had the possibility to invest in a capital pool. That capital pool is closed until the end of the year. But anybody that deposited in July of this year is now up roughly 20%, while Bitcoin since then went down in price. Of course, the massive market disruption that we saw recently helped us as well. It was actually the best weekly return ever. It brought us more than 9%. Most others got wrecked, but we made money. And so I made several videos on the topic. There's one video explaining the copy trading vault, but again, that vault is closed until the beginning of the year. But here are the two more important videos: using perpetual futures to bet on relative valuations, and risk management with relative valuation bets. Risk management is extremely important, because if you don't know how to do that, you get wrecked during volatile times. You don't make money. So here are the two videos. This is 34 minutes in length. Here's the other video, 28 minutes in length. And once you've watched those two videos and you've joined the premium groups, I will share my favorite trade with you. So the favorite trade will look very similar to the Balancer trade that we looked at. If you are not making money with that favorite trade after holding it for 1 month, I will refund the premium membership fee to you. So really, you are not risking those $125 US. If you're not making money with the trade, you just get this refunded. I will not ask any questions. If you want to be part of the next copy trading vault and you don't want to make the trades yourselves, you simply just want to deploy capital, then feel free to check out this video over here. This was the introduction to the vault from July. And feel free to consider to sign up for the annual membership, because the yearly subscribers, they get access to that copy trading vault that currently is closed. Of course, you can simply start out with monthly, start the trading yourself, and then swap to the annual membership later on. A link to premium pops up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.